Look at this chart. Price is approaching a key resistance level. Will it break through and move higher, or will it reverse and drop? What's your prediction? Welcome to MohsenTrading. In this video, we will cover 5 key topics related to support and resistance. Chapter 1. What are support and resistance levels? Chapter 2. How can traders identify support and resistance? Chapter 3. Best strategies for trading with support and resistance. Chapter 4. Interactions with other technical indicators. Chapter 5. Avoiding fake breakouts. What are support and resistance levels? In this chart of USD/JPY, a resistance level is where the price has touched multiple times and has rejected each time. Specifically, the price has reached this level 6 times and has been rejected at each point, meaning this level has become a resistance, and sellers are preventing the price from going higher. Now, when the price reaches a resistance level, we need to look at several factors. If the momentum is weak, rejection is more likely. The resistance level could be a zone, not just a price point. Resistance levels are usually in the form of a zone, not a perfect line. The more times the price touches the resistance level, the stronger that level becomes. If the price rejects multiple times, it indicates a strong resistance at this level. In this chart, for the EUR/USD pair in a 1-hour time frame, we can see that the price has touched a specific level 3 times and then reversed. This indicates that this level acts as a support level. In other words, when the price approaches this level, it is likely to reverse, showing the strength of the support. When identifying support levels or support zone, 5 key items should be considered: momentum, zone not line, multiple touches, and rejections. How can traders identify support and resistance? In this example of the USD/JPY chart on the daily time frame, the transformation of a support level into a resistance level is shown. When the price reaches the support level and breaks through it, that area turns into resistance. Traders can make the best use of these changes and apply them to identify trading opportunities in the market. Best strategies for trading with support and resistance. In the BTC/USDT chart with a 1-hour time frame, we had a significant resistance level with multiple rejections. Each time the price hit this level, it was rejected. After the resistance zone was broken, we set the breakout candle as the entry point and the last low as the stop loss, then entered the position. This strategy is known as the breakout strategy from support and resistance levels. In the Bitcoin to Tether chart with a 1-hour time frame, we identified a strong support zone. As you can see, this support zone was broken with strength. And since the price usually tends to retest the broken level, a pullback occurred to this zone. In this case, we place the entry point at the last low and the stop loss at the last high. This strategy is known as the pullback strategy. For a better understanding of consecutive highs and lows, You can watch the types of trend video with the link provided in the corner of the screen. In the USD JPY chart with a 1 hour time frame, we have a support level and a resistance level. As you can see, after 2 touches, each level is considered valid. And the more touches there are, the stronger the level becomes. Additionally, we can enter trades within the support and resistance box, which is referred to as the reversal strategy, based on support and resistance levels. Interactions with other technical indicators. In this USD to JPY chart, on the 1 hour time frame, we have a strong resistance level and a support level. At the end of the resistance level, we observe a decrease in momentum, which results in the formation of a regular divergence. At the same time, the MACD signal line and MACD line cross each other. This combination indicates that the price is likely to reverse from this resistance level. Based on these signals, we can enter a position by setting the last valid low as the entry point and the last valid high as the stop loss. As we can see, the price reverses from this resistance level, and this combination can be confirmed by using MACD along with support and resistance levels. This strategy is referred to as MACD support and resistance confirmation. To fully understand regular divergence, I suggest you check out the MACD strategy video, the link of which is placed in the top corner of the image above. Avoiding fake breakouts. In this Bitcoin to USD chart with a 5 minutes time frame, we observe a resistance level that has been broken. This breakout is accompanied by a negative regular divergence and a decrease in trading volume, indicating that the breakout is fake. By recognizing these signs, we can avoid falling for fake breakouts and use this evidence effectively in our trades. Now that we have reviewed these points, let's quickly go over the key takeaways to summarize what we have learned. Definition of support and resistance. Support is a level where the price trends to rise, and resistance is a level where the price trends to fall. Identifying support and resistance levels. Pay attention to multiple price touches at these levels and use tools like trend lines and price zones. Trading strategies. Use pullbacks, breakouts, and reversal strategies for successful trading. Confirmation with indicators. Combine support and resistance with indicators like MACD to confirm breakouts and trading signals. Avoiding fake breakouts. Check trading volume and use multiple confirmations to avoid mistakes in identifying breakouts. I hope these tips have been helpful for you. If you have any questions or feedback, I'd love to hear from you in the comments. Don't forget to like the video, subscribe to MohsenTrading, and turn on notifications so you can stay updated with our future content.